There are a lot of people thinking like Larry Fink is, but they don't have $6.7 trillion under management. And he's been a very careful and articulate spokesman for this. Obviously, it rubs a lot of people the wrong way. I mean, look in the comment section of Barron's today, and a lot of our readers do not think this is a good idea. He is well aware of that, and he is trying to bring them along slowly and make an argument that this is a bottom line.
And we're going back to the letter, what's called the letter. This was the letter
Andrew
in January.
Ross Sorkin was the first one to reveal that.
In which he endorsed?
Which he endorsed the idea of corporate social responsibility and said that basically every company has to have a social purpose. But I do think that sometimes there's a misunderstanding of what he's saying, which is he's basically not saying you need to go have a social purpose instead of making profits. He's saying you will not make profits, you will not actually be able to live in this world if you don't have some kind of social purpose that goes along with it.
I don't see what at all is controversial about what he said. I actually was on a panel, Larry and I were on a panel the day it came out or the day after it came out. And he highlighted, look, I've said in this letter that businesses need to take care of their stakeholders. They need to make money for shareholders and need to provide a nice place to work for employees and so on and so forth. I don't get what's controversial about this. If business isn't serving some social good, why are we all in it?
In a way, it's kind of an old-fashioned idea. I mean, whether you go back to Henry Ford and so forth, this was assumed in the old partnerships on Wall Street. But I think the Milton Friedman idea has been twisted a little bit to suggest that if you're thinking of anything else besides the next quarterly report, you're on an agenda that does not align with shareholders, and I think that's wrong.
I don't think that was Milton Friedman. Milton Friedman would not have agreed with it.
You're right, but it has been twisted into that.
Yeah.
And so now people, and also it's a very polarized society right now.
To remind everybody what Milton Friedman said originally, you can see it on YouTube, is what is the purpose of a board of directors and a CEO and the executives? It is to deliver profits for shareholders.
Which Fink says is best achieved by having everybody come to work in the morning with a shared purpose to do whatever that company is trying to do, among other things.
So you have this set of principles that Larry Fink is sort of leading, but you also have kind of a subset of the investment industry that clearly has seized upon this. And it's a little bit of a marketing thing as well. So, I mean, I wonder how the end investor needs to approach this. Look, if all companies are going to behave this way, Larry Fink runs a lot of index funds that own all companies. How do we think about how it plays into our investment decisions?
So we had a conference where financial advisors were speaking, and this one woman said that she had held an ESG event for her clients. And she said the dividing line was at about 41 years old. Everyone under that age said, well, of course I would only invest in alignment with my values. And everyone older than that said, what are you doing pursuing the social agenda? Your job is to maximize my returns, period. And so BlackRock has seen this, and they know that the money is moving in the direction, long term, of course, of millennials and others who want their investments aligned with their values. So I think from a long-term marketing play, it's very smart.
On the set last hour, I asked Tom Farley here about the CEO of Xiaomi, which he said is going to get a huge pay package when they list over in Asia. And I asked her, are there any rules that would have prevented him getting that kind of pay package over at the NYSE? And your response was, I've had a lot of people come to me with social responsibility issues that we thought should be part of the rules. And you have declined to push those particular issues.
Yeah, I don't think it's the exchange's job to decide how businesses should operate. I will note, it's interesting, post-Trump election, the number of those groups coming to us actually went down. You would think it might have gone the other way, but there was almost kind of this sense of, oh, it's not going to be a priority in Washington.
What were the requests that they were asking you for?
A minimum quota for the number of women on boards, something like a Rooney Rule, where you have to interview a woman for CEO positions, diverse boards. So
or else they could not list on the NYSE.
Yeah, or else you could not be listed. And then the hot one is one share, one vote. So the Snap IPO really set kind of lit a fuse where investors saw these Snap shares that were sold as part of the IPO with 0 votes and got very, very upset about that. So we heard from a lot of groups saying, please move to a one share, one vote regime, such as there was in Hong Kong until just recently.
I think the idea here is that investors will look at these issues and decide for themselves. If you think diversity on a board will make that company have a better ROE over the next decade, then you're going to put your money there.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.